Hello, and thank you for tuning in to this week's MacDesk Floor Report. I'm Rebecca Darst from the Market Access Center here on the floor of the New York Stock Exchange, where major indices are hugging the flat line. We're up about 4 points in the Dow, down about 1.5 in the S&P. This in a week that has brought us an 18th straight higher Tuesday close and the highest number of stocks trading at 52-week highs in 3 years. Both of those factoids come to us courtesy of Art Cashin here on the floor today. Activity so far has been fairly directionless. Traders are chalking that up to a pullback in the dollar index and some weak U.S. data points earlier today. First, let's recap the action overnight that brought us here. It was a generally positive session for Asia-Pacific stocks, with the Shanghai index posting its biggest gains in 2 weeks, with leadership coming from telecom, tech, and financials. Data out of China overnight included the April reading on foreign direct investment, which fell short of analyst estimates, with a rise of 0.4% in April, also lagging the previous month's reading. Tokyo's Nikkei index closed lower, with pronounced weakness in media and retail names. The relative weakness in Japanese stocks came despite a fairly upbeat read on Q1 GDP, which rose 3.5% on an annualized basis. Market watchers were expecting an increase of 2.7%, so that was a much more robust reading than analysts had expected. European stocks traded in flat to mixed territory for much of the session. Notable data included a big jump in the Eurozone trade surplus for March, which rose to $29.5 billion compared to $13 billion for the previous month and just under $9 billion comparing the year-over-year measurement. The wider trade balance was led by growth in exports from the 4 largest Eurozone economies. Here in New York, the first of several soft data points came with the release of the latest weekly initial jobless claims, which came in at 360,000. Market was looking for 330, and instead we got the highest reading in more than a month. April CPI showed a decline of 0.4% compared to a rise of 0.7% for the month of March, and April housing starts came in at 850,000, well below analyst estimates and a 5-month low. Also this morning, we had an unexpected stinker in the Philly Fed Manufacturing Index, coming off an April reading of positive 1.3, which showed slight expansion in manufacturing activity. May's reading unexpectedly dropped to negative 5.2. Additionally, as we mentioned at the top of this webcast, there's also been a pullback in the dollar index today. Interest pouring into treasuries and continued weakness in the gold complex, with precious metals continuing their slump after new filings showed large funds, including Soros Fund Management, sharply paring back positions in GLD. That's the Spider Gold Trust ETF. Heading into the close of the week, tomorrow brings the expiration of May options, which also carries the possibility, as always, of increased volume and volatility as traders adjust positions, particularly into the close. Roughly 20% of the total open interest in listed names is set to expire tomorrow, but we're seeing very little in the way of movement in the VIX, for example, and much of the interest in S&P Spider options today has been based in weekly options as traders continue to prefer a very nimble, short-term, data point-driven approach to the options market. Looking ahead to the data set to move markets next week, on Monday, May 20th, we've got a heavy day of Japanese data, with March coincident and leading indexes, April department store sales, and machine tool orders set for release. Italy will release March industrial orders and current account data, and we've got another read on the state of American manufacturing activity with the release of the April Chicago Fed National Activity Index and earnings from Campbell's and TiVo. Tuesday looks like Japan's March index of all industrial activity and supermarket sales will be released, along with April producer prices from Germany, consumer and producer price data from the UK, and earnings from AutoZone, Home Depot, Dick's Sporting Goods, Best Buy, Medtronic, and TJX. Midweek, we'll be looking for a monetary policy statement from the Bank of Japan, along with news on its target rate, as well as minutes from the latest Bank of England meeting and UK public sector borrowing. The Eurozone will release its March current account, Canada will release March retail sales, and the US will release weekly MBI mortgage applications, April existing home sales, and the latest Fed meeting minutes. A heavy week of hardline retail earnings continues with numbers from Lowe's, Target, Staples, L Brands, Hewlett-Packard, and Toll Brothers. On Thursday, we've got the Bank of Japan's monthly economic report for May PMI readings from France, Germany, and the Eurozone, March and April retail sales from Italy and the UK, and Britain will also release Q1 GDP, private consumption, government spending, imports and exports, and total business investment numbers. It's a busy day of U.S. data as well, with weekly jobless claims, May PMI, March home prices, April new home sales, and the May Kansas City Fed Index, as well as earnings from Sears Holdings, Advance Auto Parts, Ralph Lauren, Gap, GameStop, Salesforce, ING, and Pandora. And we'll end the week with a Q1 read on the German economy, along with several other German data points, including domestic demand, imports and exports, capital investment, consumer confidence, and the IFO Business Climate Survey. France will release some business confidence data readings, and U.S. data will be limited to April durable goods and capital goods. Earnings week will cap off with Foot Locker, Abercrombie & Fitch, and Heinz. We'll be watching the action as it happens here on the floor of the NYSE. Until next week, that's it from me, Rebecca Darst, for the MacDesk Floor Report.